Good morning, everybody. Welcome to the Siler Wealth Management video blog. My apologies for not having a video yesterday. I had some outside appointments and obligations, but I am here today, and I will make it up to you. Yesterday was not a volatile day. It's great. I mean, we were right smack in the heart of earnings season. We didn't have a lot of volatility. The Dow up only 15 points or so. The NASDAQ up a little bit better, but the NASDAQ was up because the biotechs, those are the most aggressive of the healthcare sector. They're not the drug companies like the Mercks, the Pfizers, the Johnson & Johnsons. These are the companies that actually develop the drugs and really don't make earnings, okay? Because they don't really have an earnings problem because they don't have earnings. They're out there with research and development and trying to find cures for special diseases or certain things. And what happens to them is that the big drug stocks gets a licensing agreement with them or buys them out. There are a lot of things that go on, but the biotech stocks are a very important part of the overall market, and especially in healthcare. So they're getting a little bit better, and they have been absolutely blasted because they are they are the target of a lot of political issues these days, starting with Hillary Clinton, who really spoke about limiting how much they can charge for drugs. So that's a big issue right now, but they have rebounded a little bit. Last week, we had a lot of bank earnings. And we had a mixed bag there. Morgan Stanley missed. Goldman Sachs missed. Wells Fargo had a good quarter. Citigroup had a really good quarter. So it's a mixed bag there. I do like the financial sector. My favorite, and again, I'm not going to tell you to go out and buy it because I don't know your personal situation, but we do own Wells Fargo for clients. I do like that stock quite a bit, but that doesn't mean it's suitable for you. This week, 20% of the S&P 500 will report earnings. So 20% of the S&P 500, do the math. 100 stocks of the S&P 500 will report earnings. About a third of the Dow will report earnings as well. So that's going to be make it a very, very busy week. Already this morning, IBM reported earnings and sales. They disappointed Wall Street. The stock is down over $5 a share. That has taken the Dow Jones, which is down a little bit over 70, but about 45 points of that is representative of IBM. So IBM is putting a little pressure on the Dow Jones Industrial Averages as well as the S&P 500. So going forward, you have big earnings this week. Next week we have Apple, we have Netflix, we have the titans of the technology sector will be reporting earnings, and it's going to be a critical time because this morning Verizon, which is part of the Dow Jones, came out and had a disappointing outlook for cell phone sales going forward. So that puts a little bit pressure. You got to look, you got to peel back a couple layers of this onion, because if Verizon's saying we may have a little bit of an issue in sales going forward, well, Apple does a lot of business with Verizon. So we'll see what happens next week. Of course, Tim Cook this morning, CEO of Apple, said they have 6.5 million subscribers, paid subscribers to Apple Music. And if you recall, a couple of weeks ago, the trial wore off, and now you're going to pay either $8.99 or $15. And I do subscribe to the Apple Music program. It's awesome. For $15, you can put 6 different iPhone or Apple Music accounts. It's really a great service. So the stock is down a little bit on the Verizon news, but we're going to see what happens going forward. A lot of great things going on. Last week I had my event at Cafe Murano. You guys were absolutely incredible. We had a big crowd, and we're going to be doing more of these events. I'm looking for venues now to do more frequent, smaller events. I've got Women in Investing coming up. I've got Investing 101 coming up. So we're going to try and get more educational for you. And this week, it's going to be really, really important to don't go out. And I don't like going out and buying a stock the night before earnings, because it has happened over and over again over the years. You see a stock going up before earnings, you think, okay, well, because look, let's face it, just because they announce earnings doesn't mean other people didn't know about it. I'm sorry, it's supposed to be, they call it regulation FD, which is full disclosure, but it doesn't always work out that way. So just because the stock's going up the day before earnings doesn't necessarily mean that it's going to continue to do so. Also on the earnings and actually news front is Weight Watchers. Oprah, in one day, because she announced that she took a 10% stake in Weight Watchers. That makes a lot of sense. No, literally, it does make a lot of sense. The stock more than doubled in one day. Now, if I were an owner of Weight Watchers, the stock, I would sell the stock today. Oprah Winfrey buying a 10% stake in that stock does not warrant it going up 105% in one day. Wish I could tell you I bought it and I owned it. I do not, because the stock had been a disaster until then. So Oprah probably got a pretty good price. I see that stock be pulling back. Do not chase it, please. Do not go, you Oprah Winfrey fans out there. Do not go chase that stock. I think it will pull back. Anyway, in the meantime, I will have another report tomorrow, okay? I know I missed yesterday. I'll have one tomorrow. The newsletter is out. It is going to be on the website here in the next 15, 20 minutes, but it is in the email sourcing system, so it'll be going out here also in the next few minutes. So enjoy it. If you want to subscribe it and get it straight to your inbox, all you do is go to my website, stockdr.com or silerwealth.com. I'm Lee Siler. Thanks for joining me, and I will see you tomorrow.